Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only, and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar fell on the back foot on Wednesday following the release of the Australian CPI Q2. According to the Australian Bureau of Statistics, or the ABS, the figures were released that the one was 1.8% for June quarter, bringing the annual inflation rate to 6.1%, the highest reading since 1990. The given data shows that the RBA will most likely lift interest rates by 50 basis points at its next meeting, which is August the 2nd. Meanwhile, the US Federal Reserve Monetary Policy sitting has commenced its two-day meeting, and it's widely expected that we will get a 75 basis point rate hike. While a 75 basis point rate hike looks likely, this has been fully priced in, I feel, and the fact is that any real sudden moves to the upside for the US dollar is likely to be limited. More importantly, though, is the central bank is expected to outline its hawkish policy stance in its statement, and along with that, with the 30 minutes after the announcement, Jerome Powell, the Fed chairman, will take questions and answers. It will be very interesting to see if investors will find that any of the comments made in the statement or by Fed chairman Powell, if it displays some dovish overturns. And what I mean by that is if the market actually feels that the Fed is actually backing down slightly from its recent aggressive approach to interest rates, that is hiking them. So let's see how the market plays into the European session, and all eyes on the Fed tonight at 4 a.m. Sydney time when they announce the monetary policy decision. In light of the pattern for the Australian dollar, any weakness towards 69.10 or even lower towards 68.70 should find good demand, and therefore from this region I anticipate that the market should stage a recovery from here and look back towards the top side, which is a bit of a struggle at the moment around that 60-day moving average at around 69.65, and a break here should give further scope up towards 70.65 where I'm looking at. The euro, well, after 6 consecutive challenges at that 102.70.80, the market's back to wake rather sharply. And from there, the dollar index, which measures the greenback strength against a basket of 6 major currency, also advanced from 106.30 to 106.90. I'm not getting bearish at this point for the euro. I feel the market still potentially can rise up towards 102 to 102.70.80, and any weakness should find demand that is around the 101.30 level. Only a break of 100.55 will be a concern, because that would actually reopen and expose the region of 99. But I feel if the market does perceive the statement or the comments from Jerome Powell as dovish, then the dollar might take a bit of a back step, which I feel may happen. So let's see into tonight. Look at the dollar yen, the market's somewhat showing a flag here, and I feel that from the flag can actually give us one more test down, and that is towards the region, I feel, of 134.60.90, and reassess from there as profit taking may emerge back into this trend line and see a bounce. But keep an eye on that level, 134.60.90, and let's see if the market can either take it out or stage a bounce. The sterling was a little bit whipsawed overnight, but nevertheless still holding to its gains that we've seen from most of this week. Looking at the pattern, I feel there is still further potential to that 121.60.70 challenge, and that is where this broad downtrend comes in, and reassess from there. Although the bullish outside range, or the engulfing candle, has been supportive to look to the target of around 1,742 to 46, there has been a little bit of disappointment in the last 2.5 days, but nevertheless, we're not quite breaking to the downside as of yet, as the technicals are still holding. And as long as we don't get a close under 1,714 in New York, then I feel the top side target should eventually be reached somewhere around 42 to 6. A close under 14, reinstate the downside of 1,687, but really keep an eye on the dollar index to get more guidance in terms of how the markets are broadly looking. After taking the a rejection from 92, 20, 40 area. The market looked back to that topside downtrend, and as you can see from the rejection, has put a slightly bearish note or tone into the market now. I feel there is further scope to the downside now, looking towards this 92, 2080 or 2040 level, and a break there would give further scope towards the bottom side of the range, which now looks somewhere around $88 a barrel. Weak technicals do actually conclude that the further down test is the higher side of the risk, and therefore we could see that break of 92.20 that would trigger stops, as I feel the market's still quite long. Well, that wraps it for today. Thank you very much for joining me. As always, look out for the intraday report, and I hope you enjoy the rest of the day.